Good afternoon, everybody. And first of all, thank you to Nidhi and her team. This is the city of my birth, and any chance I get to come back to Bombay is always a pleasure. I grew up playing cricket in Bandra West, so I'm really happy to be here. As I was thinking about what I would talk about today, my two brothers reminded me that 65 years ago, to the day pretty much, Dr. Homi Bhabha recruited my dad to help set the path for India's nuclear ambitions. And, working with a visionary like that, India's been blessed to have many visionaries. And while it might sound like a little bit of an overstatement, and I'm going to embarrass Chairman Raman, I think India is now potentially in the stage of a big bang for retirement security. And why do I make such a bold claim? My background is I started my career at the World Bank in 1992, issuing bonds for the World Bank. And in 1995, I was asked to manage the pension fund. And as some of you might remember, the World Bank at that time was going around the world telling all the countries to privatize Social Security. They were copying the Chilean model and telling everybody to privatize Social Security. And because I managed the World Bank's pension plan, I was convinced that this was terrible advice. And if anything, it was actually going to move money from poor people to rich, which is the exact opposite mandate of the World Bank. And so I left the World Bank and I wrote a book with Professor Franco Modigliani, who's a Nobel Prize winner, predicting that this would lead to a disaster. And so I've been working on pension reforms for the last 30 years around the world. And I think where we are in India today is very, very interesting because you have the opportunity in India to actually create a world-class pension system that will be the envy of the West as well, right? And if you saw President Macron complimenting India about how our digital capabilities now allows a street vendor to even have a bank account. Today, what you have with UPI and QR codes is so forward-thinking that India really could design a pension system that's for the next generation and not backward-looking as well. So in the few minutes I have, I'm going to walk you through a slight agenda that I prepared, but I'll try to be brief, and I'm happy to take questions either before or after the session. But essentially, I'm going to break it down into what does it mean when we ask all of you in the audience to actually think about managing your own pension fund. And I had a brilliant team of people at the World Bank, PhDs from around the world, and we made a lot of mistakes. In fact, I joke with my students that if you're training to be a pilot or to be a surgeon, you got to be right 100% of the time or you're out of a job. When you're managing a pension fund, you can be wrong about 45% of the time and you still get a 7-figure salary. But what's interesting is when we move that responsibility onto you, it's a very, very interesting problem. And why I was able to, 25 years ago, predict that the World Bank would cause a disaster, and why I think you have to develop something on your own and not listen to people from the OECD and the World Bank. I'm then going to come up to this term that I've phrased called super accessible, and I'll break it down because it goes back to the earlier slide that Indranil had about various stakeholders in a pension system and show you how we can get all the objectives into one sort of acronym. Because if you don't design a pension system that covers all the stakeholders, you're going to have trouble and it's going to fail. And then I'm going to talk through some of the innovative things that Chairman Raman's team has been doing, which if you haven't read, you should, because it's really forward-thinking, and I haven't seen anything like this anywhere else in the world before. And then I'm going to recommend, and I'm very upset that Mr. Nagaraju left earlier, because he can actually alter the outcome of your pensions by creating a bond I called India's, and I'm going to discuss that briefly, because we actually helped Brazil create this bond in 2023, and it can be transformational in India, okay? And then finally, because I'm a part-time professor, I'm going to grade PFRDA, and hopefully you agree with my grading scheme as well. So let's take a step back. Why was it so easy to predict that you're going to have a catastrophe if you ask individuals to make retirement decisions, which typically were made by either your government or your company? And it's very simple. When the government manages a pension system for an entire country, you get to average out your risks over multiple generations. When we now turn it over to you, you've just got one life to get it correct. And so a few bad decisions can ruin you completely. And add to that, retirement is about making 3 big decisions correct: how much to save, how to invest, which is also complicated, and how to decumulate that pool of money. I manage money for a living. I've managed institutional clients' money. I've made money in 2008. In 2020, my own personal account is a disaster, right? So we're asking people with very little financial sophistication to make these complex decisions, and so there is a potential that this could blow up very badly. You add to that a country like India, which has a lot of people in the informal sector. You have agriculture workers, you have the Uber drivers, the Blinkit drivers. We're going to ask them to make these decisions? Not going to happen, right? And finally, if you don't offer people real annuities in a country like India with inflation, then what's going to happen is if you get a nominal annuity, then your real standard of living is going to decline, which then causes a number of problems for society as well. And so essentially, what you need in a country like India is a simple design that's digitally enabled. And to paraphrase Chairman Raman, who doesn't pay me for all these endorsements, he has a beautiful comment that says, if India can have UPI for payments, why can't it have UPI for pensions? And I think that should be the mantra that all of you take away, is that's really where India is today. The fact that President Macron realizes that India is far superior to where France or the US or the UK is actually a point of competitive advantage for India in designing a state-of-the-art system. Very briefly, why did I come up with this acronym super accessible? Is that when you look at all these stakeholders, you need a system that's simple, universal, portable. What do I mean by portable? It's not tied to the state in which you live in. It's not tied to the employer with whom you're working. Because today we're living in a world of a gig economy, right? My kids work for 2 years and then they stop and then they go work for another company. This is going to be the India of the future, not all of us who wanted lifetime employment. As Chairman Raman said, we want returns that are high, we want adequate pensions, we want choice, we want to allow people to participate and be competitive. All of you in the room should want to be able to offer products, and we want it to be inclusive, but ideally at low cost, because the higher the cost, the lower your pension. So I tried to put this acronym together because you not only want the system to be super accessible for a country like India that's so dispersed, but you also want to check off all of these criteria. And that's how I'm going to grade what PFRDA is recommending today, right? So actually, if any of you have read this consultation paper by PFRDA, you probably have seen how well written this paper is. But if you haven't, this is well worth your time. And that's in the footnote right here. And I think it was published last year, probably in about October or November. And what I love about what they've tried to do is, in the old days, the World Bank and the OECD take a pension model and try to force it down your throat without asking what is it that the country needs. And what this document very beautifully articulates, and as you can see, I like acronyms, is that the definition of the objective for India is what I call sari flips, right? It should be structured, it should be adequate, reliable, real income with flexibility, liquidity, inclusion, portability, and simple. Once PFRDA has articulated that set of goals, then we can move to what is it that they're trying to achieve. And it's really the simple statement at the bottom of the chart, which is, what do we as retirees want? All we want is to be able to maintain our pre-retirement lifestyle into retirement. That's all it is. It's not a complicated equation. It's not a fancy statement. It's a really simple statement of what all of us, or the people who are driving Ubers, or the household help want, which is, I want to maintain my standard of living into retirement as well, right? So now here's where, with one simple chart, you can actually prove that everything you learn in your finance class was pretty much wrong, and why a lot of the products in the market are also terrible for retirement security, right? On the left-hand side, if you haven't read this paper, it was actually the paper that won my advisor the Nobel Prize. It's called the life cycle hypothesis. And the argument was that we all save during our working lives to be able to finance a set of cash flows when we hit retirement. So this chart on the left could basically be the chart for my 25-year-old son, who doesn't need anything until he gets to age 65. And then at age 65, maybe he wants 5,000 rupees per month in today's rupees, right, in real terms. Now, I used to issue bonds for the World Bank, and because finance theory and finance practice is all about wealth preservation, right? I keep hearing the word corpus, corpus, corpus. The word corpus in retirement is irrelevant, because what I really want is, can you finance these set of cash flows for me? So all the instruments in the market today, whether it's stocks, REITs, or even traditional government bonds, are very risky relative to this cash flow, right? So this is why I wanted Mr. Nagaraju to be here, was the government of India is issuing risky securities for your pension fund. Why? Because for my 25-year-old son, if he bought a 30-year-old government security, even if it was inflation protected, would get coupons when he doesn't need it. So those are those little green boxes. And then it'll throw off a principal repayment well before he needs it either, which means he has to do a whole bunch of additional transactions to move the cash flows to what he needs. Now you could say, why doesn't the private sector do it? It's extremely expensive, extremely complex. I used to do this for the World Bank. This is not easy work. It makes it extremely hard for the regulator and the asset provider to create the cash flows that my 25-year-old son or any one of you in this room wants, right? So when you have assets that are risky compared to the cash flows for what we need for our household goals, it's pretty easy to predict that there's going to be a retirement crisis because you cannot give people a safe retirement, right? So now here's where the recommendation I've been making for some time now is that India needs to create a new instrument I call INDIAS, which stands for Inflation-Linked Deferred Income Annuity-like Securities. And this is not just dreaming up something. We actually created this in Brazil in 2023. Brazil has won a number of awards, and India has the same starting conditions that Brazil had back then. We can show you in a few slides how this is really good for every one of you in the room. It's really a good deal for the government, and it's particularly a good deal for the financial institutions who are going to try to create new products under the schemes that PFRDA has articulated as well. And the benefit of all of this is it not only achieves the goal of a Viksit Bharat and Atmanirbhar, but in the budget that was recently announced by the minister, she had two challenges that India has to face that this bond will address. One, they want to finance infrastructure to the tune of about $150 billion, and you don't want that for my American pension fund clients. And two, they have to issue new debt, again of about $150 billion, which again you don't want from my pension fund clients because they're going to run away the first chance you get. So sitting in India is the solution to the budget problems that Mr. Nagaraju and his colleagues have, and a solution to what Mr. Raman and his colleagues are trying to do with PFRDA. Okay? So let me just walk you through this very quickly. The way we designed this bond was super simple. It had to be something that even an Uber driver could understand, because that's basically what we were trying to do in Brazil. And the bond is structured as follows. It pays you nothing till you get to your retirement age. For simplicity, let me say it's 65. But there are bonds that have different start dates for everybody in the country. It pays you nothing till you get to retirement, and then at retirement, it pays you monthly coupons for 20 years. So you basically get 240 paychecks from this bond. And each bond pays you 5 rupees real per month. Why did we pick 5 rupees real per month? Because if the Uber driver says, I need 5,000 rupees of additional income in retirement, the only goal they have to think about is they've got to buy 1,000 bonds before they die, or before they retire, right? No more complicated compounding calculations, no more complex worries about guaranteed returns. If they buy these bonds, they've got a secure retirement, and throughout their life cycle, I can tell them where they are relative to their goal, which means either I can tell them to save more, take more risk, or postpone retirement. In today's schemes around the world, you don't have this availability, which makes retirement planning extremely complex. Now, the way we did this in Brazil, it's available on your app. Literally, you have an app that asks you 2 questions. What's your target date of retirement, and what's your target income goal? And then you say, I have 10 rupees to invest, and you press a button, and it puts you in the right security. In Brazil, there's a QR code that you can actually have given to your employer. So if you're a household help, rather than giving them a Diwali bakshish, which their husband is going to drink or gamble, you can actually give them slices of retirement income in slices as small as 10 rupees at a time, because this is all digitally enabled, right? And they have gift cards as well. So Brazil has taken the same concept that we have of UPI and leveraged it to provide pensions for people. And it solves the problem that Mr. Nagaraju talked about, which is you don't have to set up expensive pension systems. Buying this instrument is basically buying an individual defined benefit, right? So by creating this new instrument, you take away the cost of all the infrastructure of having to manage a pension fund for the poorest people, for even whom a 1 rupee report is going to be an expensive reduction in their pension. The beauty of this bond, it's inheritable. You die young, your family gets the bond, right? It's simple. You change your date to retirement, you can sell it back to the government and buy the one that relates to the date you want. And most importantly, for the folks in here who are actuaries and life insurance providers, it greatly improves your ability to provide real annuities. If you don't have this instrument, India cannot have real annuities. I don't care what financial engineering you do. So here's where India can actually create a bond which allows it to fund its long-term infrastructure goals, is a new debt instrument to capture the debt overhang that they have, but at the same time improve retirement security, right? And that's why I hope all of you pressure your government to create it. I have no incentive. I don't make any money from doing this. Okay? Now I'm going to talk a little bit about the 3 pension schemes that the PFRDA has put out, because then I'll put up a grading scheme after that. If you haven't read it, as I said, there are 3 simple ideas for product choice. One is a wealth-oriented product, which they call NPS 1, and I'll leave that out for now. I really like the idea of NPS variant 2, which basically asks product providers to break the portfolio up into 2 poles, one that gives you real cash flows and 2 that gives you standard of living adjustment. This is a really brilliant design because it actually allows you to separate the 2 components that people want in retirement. But I think without creating an instrument like India's, and RBI has stopped issuing inflation-linked securities, which I think is a mistake, you cannot get that first piece of real protection. So as good as the design is from PFRDA, if either RBI or the Ministry of Finance doesn't create this instrument, the product providers in this room are going to struggle to create that product. The second component, which is standard of living adjustment, I think that you can do by hedging it with oil futures and commodities and other securities as well. NPS 3 is actually the one I am most impressed by because it's really taking this thought about how to guarantee retirement security to the next level. Because what I had always imagined was retirement was like a 20-year window. And what the folks at PFRDA said is, let's break it up maybe into small 5-year pieces because it's hard to give a 20-year guarantee. And that's really genius because it allows the private sector to come and offer these shorter-term guarantees. So they've broken down the problem, and I wish I thought of it myself, but I'm glad somebody did. The challenge for PFRD, and they call this pension credit, so you can actually buy a pension credit that guarantees 5 years of real income, is if there isn't a security like India's to price it, then it's going to be very arbitrary. So therefore, PFRDA will have to step in and create a pricing mechanism by which all participants will have to play the game. But here's what's amazing, is we have countries like Australia that everybody wants to copy, and they have a system called superannuation. What's funny about Australia, it has no annuation and it's not super. Whereas India is on the path to creating a really, truly amazing superannuation system by creating these ideas of how many pension credits have you accumulated so that you'll know how many slices of 100 rupees real have I guaranteed for my retirement. So here's where your government is actually working very well to try to create new instruments for you that the private sector can then offer to the public. So now that I have to grade it, how super is the system? It's not yet simple. I think the 3 NPS variants are still more complicated than I would like. Definitely universal, definitely portable. I don't think it's easy for the government under the current structure, but I think as Chairman Raman said, the return potential is high because you can combine these bonds with equities and create very interesting products or alternative assets. You don't have to put 100% of your money in these bonds, but it allows you to hedge the cash flow risk that PFRDA wants you to provide. So 4 out of 5, which is higher than most other countries that I work with have achieved so far. How accessible is it? I think it's not really adequate yet because we have to encourage people to save more. Choice is great. Certainty of outcome, the ambition is there. I think it's super easy for employers because the employers can get out of the pension business completely. It then also allows you to get a very simple report about how many pension credits have you locked in. I don't know where bad governance is because we don't have the system live, but still, India gets an 8 out of 5 on the accessible scale as well. And I think this is the highest rating I have for about 25 countries that I track. And as I said, if India can check a few more boxes, I think it'll deliver an incredible pension system for you and your children, which is really what we should be aspiring to do. So to very briefly conclude, I think if NPS is able to get these 3 products out there in the market, it's a win-win-win for individuals, the financial sector, and the government. Individuals essentially will get what they need, which is a product that caters to their goals, which, as Chairman Raman said, is not a corpus. It's about having a steady stream of income to maintain your lifestyle. You don't want to be thinking about these investment decisions when you're my age and older. Right? The best part, I think, is that the idea is that they don't want it to be paternalistic. It's not going to be government mandated. The private sector has to be competitive and creative. And that's the best way to get best new ideas to come into the market and transform retirement security. And I think I do a lot of work in America where the government kind of requires you to put your money in a stupid product called target date funds or life cycle funds, and actually show that if you do the math, your retirement outcome becomes a function of your date of conception, which is a terrible way to structure a pension system. What PFRDA is offering you is a roadmap to design good products. It's not a requirement. And like I said, finally, the government is doing a great job, but if the Ministry of Finance and RBI do not innovate, they're not going to be successful. I'm sorry to say that, but that's how simple it is. So I really think India could be a trendsetter in global pensions, and we definitely need India's. And just to close, my wife is a Delhi girl, and PFRDA's sort of theme is NPS Zaruri Hai. And she came up with this idea, which is Surakshit Retirement Zaruri Hai, Bharat Bond Majburi Hai. Thank you very much. Jai Hind.